Hey guys, Losing Louie here, and yeah, I got my heartburn medication out because that damn stock market is crashing again. And this is not a gold and silver video, and there's no unboxing. This is just discussion of the stock market from an older person's perspective. And I'm not a financial advisor; this is just my opinion. But I'm going to give it. Like I said, I am approaching retirement, and I have been in the stock market my whole professional career. The boom and bust cycle is getting ridiculous, okay? These repeating booms and busts and booms are really starting to concern me. Now, the only reason right now that I'm not really upset is that I have started taking money off the table. And I'm not saying you should do that today. You know, that's your choice whether you want to take money off the table. But I have systematically, ever since Dow 17,000, been taking money off the table within my 401k and parking it into money market. So here's the reason for that, and why I'm sleeping a little bit better today as opposed to in the past. Going back, I've had my money invested a long time. And the first serious crash that I recall was around 2001, 2002, right after Y2K. The whole market fell apart, and people's retirements were slashed. And I know, that happened to me as well. And there had been quite a bit of savings up to that point, and poof, all of a sudden, half of it's gone. But I stayed in. And the market recovered, and you're not supposed to jump out at the bottom, and I don't recommend you do that if you're good at determining what the bottom is. Although I had lost something like half the value, the market did come back. And you know what? It came back. I think it might have even exceeded the old highs. But by 2008, we had the second crash, the banking crisis, right? And this time we crashed even further. It went from, I believe, about 17,000 down to 8,000. All right, that was a horrific reduction in our 401ks and our other stock holdings. So this was, in my career, the second time I had basically been wiped out. And again, I stayed in, as you're supposed to do, because I was still pretty young. And we rode all the way back up to 18,000, which people said was impossible. And if you listen to the pundits, when we had the crash, when we were back down around 8,000, many of them were saying that we wouldn't see Dow 18,000 for a generation because it was unheard of. Well, sure enough, everything recovered, got pumped all the way back up to 18,000. And that was about the time I started thinking about taking some money off the table. I don't believe in bonds at the current juncture. Bonds have been going up for a generation, and I don't want to be the guy to buy bonds when they're about to crash. So that's not something I recommend or invest in. So what I started doing around Dow, when it came back to Dow 17,000, was pulling money out of the market. And I'm not saying all your money, and I'm not saying take a tax loss, but I started parking money into cash. And what some of you may come to realize is, as you get older and start planning for retirement, that money has got to be there. For me, I don't have another 10 years to watch this market go back to Dow 8,000 and hope for another recovery. That'll make the third time I would have been wiped out. All right, in a person's lifetime, you don't get that many chances to be wiped out and come back. So this is why I'm happy to be diversified, both within the stock market, money market versus stocks. I'm glad that I have reduced my allocation into my 401k, and I've been doing that since I've been stacking, to try to get more money out of the government's hands. When it's in a 401k, it's basically only yours if you choose to take a gigantic penalty and tax penalty and be taxed on the money. So it might be best to not put it all in there. Certainly get your matching from your employer, because that's free money. But when it comes to making extra contributions, I've scaled that back, and I'm taking more taxable. Although I don't like paying taxes on it, I'm taking cash and paying the tax, because lately I've started to recognize that it is more likely that tax rates will be higher in the future than they are now. That's a guess, but with the fiat currency we have and the 20 trillion of debt, I don't see a scenario where taxes don't go up. I mean, I just don't see that scenario happening. So I want my cash. Once I've got my cash, I want it diversified into real assets, which includes a small percentage of precious metals, which I'm making money on, and I'm happy about that, and real estate and other hard assets. And then within the stock market, certainly, some of that is parked. As I said to a family member recently, who, I'll tell you the story in a second, when we get older, the return of our money is more important than the return on our money. And I know the conventional wisdom now is to stay, largely invested. You're supposed to live till you're 90 years old, and you won't have any income on the money if you don't do that. But I think the times are changing, and I think the stacker community recognizes that times are changing. So what I said to my family member, who was recently retired and drawing Social Security, when you invest your money, and she had a pretty sizable portfolio, I would not go into the fully invested, aggressive stock mix. I think you're just begging for a problem. And sure enough, here we have the sell-off, and now what is she to do? She has put her money into investments which probably would pay off just fine over the next 20 years, but she maybe has 10 years left in her retirement. So, that's why I think you really need to be defensive. As Part-Time Prepper says to his wife, his precious metal stack is his, honey, we don't have to eat dog food money. But the same thing goes for your 401k. If you're fully invested in stocks in your 401k, I mean, you're just aggressive stocks to the max or even the Dow Jones or the S&P, and the market starts to crash, all you can do is watch. And if you get out fast, okay, then you're okay. But once we start losing multi-thousand points in a day, then you're going to be hard pressed to take your money out. It's probably not even recommended. So if you don't have some cash on the sidelines, maybe even a sizable, significant portion of cash on the sidelines, you are left with nothing but heartburn and the prospect that you won't be able to retire. So although I'm pushing 60, this is real for me. I wish that I had had this conversation with myself 10 years ago when I was 50. Because when you're 50, you don't see 60 coming. You got the world by the tail, and lots of income coming in, hopefully, if you've had a good career, and you don't see 60, 65 coming. I kid you not. It's hard to see the future. But when you get to be 60 and you start looking at retirement at 65 or even 70, your perspective changes entirely. So this is my recommendation, but it's not a recommendation, it's just what I would do if I could talk to my younger self, would be to don't get yourself fully invested in this fiat-oriented Ponzi scheme of a stock market. Yes, most of your money should be in the market because you're going to live a long time and you want to see returns when they come back. But a sizable portion should be in something else, perhaps even outside of the government's risk. Where is all the money? Well, it's in the stock market. Okay, that's where it is. So when the government needs money, and they do, and perhaps they get a little more liberal in their mindset, or even a little more socialist if old Bernie gets in office, or a little more communist, who knows, where do you think they're going to be looking for that money? Well, like the bank robbers say, why do you rob the banks? That's where the money is, okay? And the 401ks is where the money is. There's also propping going up by the Federal Reserve. They're buying directly into the stock market to do propping. And if you can take a clue from China, how would you like to be told, and I'm not saying this is going to happen or happen tomorrow, but the Chinese, a large segment of the investors were told, you can't sell your stocks. All right, imagine that. That's why China's crashing, because they've been, in addition to recession, they were told their stock market is a guillotine ready to chop their head off if they exercise free market choice. So I'm starting to ramble now, but I'm saying, I'm sleeping a little easier today because I'm not fully invested. And precious metals are part of that, and other real assets are part of that. Having more money outside the grasp of the evil government empire is part of that. So start to rethink conventional values. I would have never even made this video a few years ago, but it's all becoming very clear to me now. Okay, you want money that's in your hands. You want wealth that's in your hands. You don't want to be locked into the casino that's going on right now. And I'm glad that I'm not 100% in it. All right, that's all I have for now. You guys take care. Please provide your comments and thoughts. I appreciate it. Bye.